I think it's fair to say that there are two questions that are really focusing investor attention right now. We've seen much higher inflation with the pandemic. And the big fear there is that if you have the higher prices, but you have economic activity being dampened, then you end up in a very unhappy place, the justifiably dreaded state of stagflation. So that's something that I think that is one of the reasons that in September we saw market performance significantly less buoyant or less buoyant than we've seen through the majority of the year. The second thing that I think is of perhaps growing concern for investors is the outlook for Fed tapering of asset purchases by the Federal Reserve and the ECB over time. Those are two fairly significant worries among investors that I think will be very, very important for the remainder of the year.
Changes in inflation expectations have really been a driving force for the shape of the yield curve, from around 2% to around 1.8%. However, this all changed after the Federal Reserve meeting in September, and this really spurred rates higher. The increase is really driven by the Fed's message that they're going to begin the taper process in November, combined with an increased outlook for inflation and potentially increasing rates in 2022. But inflation expectations really have continued to rise. You have higher oil prices and constrained supply chain issues really added to the view that investors think inflation will continue to rise.
I think the big hiccup in the economy is the continuation of supply chain disruptions and that whole management. Now, this was a 2-decade, maybe 3-decade project by multinational firms to really streamline and optimize their supply chain for last minute delivery, really trying to remove as much unnecessary inventory from their own balance sheets as possible. But unfortunately, at this point, because of the disruptions caused by the pandemic, that's really thrown a spanner into the works, as they say in England. And it's really unclear how long it's going to take to get things running again. The consequence of running these really optimized supply chains is that if you undo part of it, it kind of unravels. And it's hard to know exactly how to put that puzzle back together when it seems to be so fragile.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting sextantfunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Sextant Funds in a free prospectus or summary prospectus, please visit sextantfunds.com or call 1-800-728-8762.